All right. Happy Wednesday. Hope you guys are doing good. Appreciate y'all hopping on here on a Wednesday night. We're going to run it down, do a little Q&A, answer all of your, want to knows, whatever they might be when it comes to digital assets, estate planning, tax mitigation, private investment, tokenization of real world assets, legislation, global macro economic events, and all the like, right? So go ahead and start it off. Got a few people here in the chat already. So not a whole lot's changed. Still waiting on stablecoin regulation. That seems to be looming, which is cool. Congress did post a picture of the bill this morning. Gary also tweeted, don't know if you guys saw that, Mr. Gensler tweeted not too long ago. And it sounded like a goodbye post, and it was not. He was, he said, I've really enjoyed my 3-year tenure here at the SEC, and I'm excited about, what we've been able to accomplish. And it sounded like, a farewell speech, but the thread does not go that way, even though it starts that direction. And a lot of people in the comments there, let him know that they're ready for him to be out, and maybe somebody else brought in that is actually going to be in the interest of investor protection. On that note, and I don't know if I talked about this. I have so many conversations with people. It's hard to remember what I do on the lives and what's not. But I'd like to see an accredited investor test put forth, proposed by the SEC. Because right now the net worth requirement, we allow people to participate with us through the Mastermind and the private investments because we meet the criteria for a 506B Reg D fund through what we provide there. So the two stipulations for that are that you have to have a pre-existing business relationship with whoever's putting the fund on or raising the capital. And then you also need to be sophisticated in their eyes, which is ambiguous here in the US. There really is no definition for that. But, we provide financial education and business resources there in the Mastermind. And so we allow people to participate with us in the private investments and feel as though, those resources allow them to be qualified as sophisticated. But I'd like to see, a way aside from income to qualify as an accredited investor here in the US. Other jurisdictions do a little bit better job of defining other ways and routes that you can become sophisticated or accredited or qualified to be able to participate in private investment and other opportunities. If you work in a specific industry for a certain period of time and you have a competency around whatever that might be, let's say you're in a medical field and you work as a professional in that industry for a couple years and you're in the UK. If there's an investment in medical technology or biotech or anything to do with medical, you could qualify as sophisticated over there in the UK and be able to participate in that. If you have some tenure, working at a firm that does private investment or works in private markets, that could also qualify you over there. So they've got 5 or 6 pieces of criteria where people can qualify aside from the income component, which they do. They have that as well. And I get that, right? Like if you have enough cash flow to float you through, if you make a bad choice, you have some cushion, cool. I can understand the thought process behind that. But after the blue sky laws were passed in the 30s, it's really inhibited most people's ability to participate in private investment and kind of handicap people in their ability to, take a chance on something that they really might understand, even though they'd be qualified and they'd have the knowledge. But like, as an example, there might be people here that watch this that you probably understand that Ripple is going to do really well, and you're hopeful that they're going to get past the lawsuit with the SEC and they'll be able to IPO. And if they do really well, then there might be some potential upside there. But if you're not accredited, you can't really get access to that unless you're part of another group. So just stuff like that. If you have a high competency in digital assets and you've been in it for a while, I think you should be able to participate on stuff like that. And I don't know what the test looks like for an accredited investor here in the US that's being put forth, because just because you have a knowledge base to be able to invest in private equity or a certain sector of the economy or a type of company doesn't mean you'd be a qualified investor or an accredited investor for real estate, right? Unless you've worked at a firm and you understand how to do due diligence over there and you understand cash on cash and IRR, and how to discount cash flows back and cap rate and all the other things that might be associated with those types of investment that you don't even have to look at or understand for private equity, then I don't know that you'd be able to participate in that. So maybe there's a large variety of tests depending on what type of investment you're going to be making, and they could segment those, and you could take each one as you became competent in those to be able to invest in that vertical or private investment. I think that that's probably a better way to do it, is to segment it out just so that people can prove that they are educated on whatever the investment is or sector of the financial markets that they're investing in. But just the net worth or the income inhibits a lot of people from investing the amount of money that they do have that could turn into a lot of money. That the only place they can put it's the stock market, right? And you've seen a large swath of the population here in the U.S. That's where they put it. They just set it and forget it, and that's kind of the theme that everybody tells you. Just put it in the S&P 500 and you'll be able to retire in 50 years or however long it is. Compound interest, that's the key. The longer you play the game, the more you can't keep up with inflation. And if you do, if it is in the stock market, that's all you're doing is keeping up with inflation. You're really not you have no actual return with your money in the S&P 500. You're going to have to make educated bets and to get a real return on things. So anyway, get off my high horse. And for those that don't know, to be accredited or qualify for that here in the U.S., if you're single, you have to make more than $200,000 a year, $300,000 a year. If you're married, it might be $350,000. And then single or married, you have to have at least $1 million in net worth outside of the equity in your primary residence. Or you can take Series 65 and get sponsored by a broker and have to deal with all the compliance for the SEC or FINRA and the continuing education and reporting to them all of your investments every single quarter, which most people don't really want to do. So, and that test is not about making money. It's about all the compliance that's involved with an RIA and to be a financial advisor and all the other things that go along with that. So I think there's a better way. I'm hopeful that changes in the next couple of years here. I think, people are proposing that. There just needs to be a unified framework that comes together out of Congress for that, or maybe the SEC actually proposes. So excited to see, where that, if I can play a role in that, that's great. That's one of the things that I want to do. Beyond Broke, the whole mindset behind the Mastermind was to help 1 million people become financially free. And the way that you do that is you provide them with opportunities to get outsized returns or real returns on their capital and educate them on how to, manage their wealth and make educated choices with their investments. So go ahead and hop into the questions here. We got a few of them in the chat. Appreciate you guys asking these. We'll say had some really good calls off of the lives that I've been doing. If you don't know who I am or what I do, I'm the director for Digital Ascension Group. We are we're one of 2 multifamily offices here in the U.S. that specialize in digital assets. We provide custody for our clients, qualified custody that's insured up to $50 million in segregated vaults through our custody partner, Standard Custody and Trust, which is pending acquisition from Ripple. And the NYDFS has to make that final decision. Hopefully I get some type of communication. When I talked to them today, they said that they were at least going to follow up. There's still no formal news on that, but it is close, were the words that I was given. So for those that are on the burner, waiting for their ability to move their assets in, and they filled out the KYC, as soon as we do have the capability, you will be first on the docket, and we'll be running people through to make sure that they can get in qualified custody and have insurance on their assets. So let's see here. Scroll on up. A lot of good questions. I'll try to get to everything. We've gotten this one a lot, but I'll go ahead and address it up front here. Everybody knows I'm biased toward XRP. That's my only investment. I don't have anything else. So just take everything with a grain of salt that I say. It's not that I'm against anything else. In particular, I think there's headwinds and tailwinds for different projects. I like things that are utility driven and that will provide value in the real world, just like companies. I want to see the team behind them, the product, and how it's going to be able to provide value for other people and why they would exchange their dollars for that, or what benefit it provides. So that's how I look at digital assets, and XRP solves a lot of problems with the liquidity that it can provide for financial markets and banks and transactions at scale. So anyway, all that to say, he asks, do you will hit double digits this year? Not financial advice, of course. I think double digits is completely out of the question. And I'll explain why. It's either single digits or triple or beyond. There's no double for me. Maybe 50 or higher. Let me qualify that. So if we just had a standard bull run for XRP and speculation ensues and we do get some upside there, I think you could see high single digits. I don't think you ever get to double digits. I don't think there's enough volume from retail that could actually push it high enough. The last time that we saw a big spike was after Ripple locked up 50 billion and constricted the supply. They've continued to put that onto the market, and we now have it's just not feasible or reasonable for XRP to go to double digits on retail speculation. Now, if we get utility, which is why I discussed 50, 100, 1,000. It'll sound crazy saying 1,000, but let me qualify that. If you got back in settlement for the stock market, to be able to settle real time and solve a problem, if there were one, I think you could see 4 digits. I mean, it's $6 trillion worth of value in stocks globally that can be settled through that network. And there's really no solution for that currently. There's no accounting mechanism across all of the clearinghouses and brokers. And that's why you saw the problems with AMC and GameStop. They oversold the stock because there was so much volume on it. And the interfaces that we have now through Webull and Robinhood and eToro and E-Trade, any of these apps that you have on your phone seem like you're trading real time, but in reality, there's still T+2 settlement on the back end between the broker and the clearinghouse. And if there's enough volume on it, they don't have full visibility on how much stock has been sold. So if you had tokenized shares, you would know exactly. You couldn't sell stock that you didn't have. There's no double spend. And they wouldn't have to halt trading, right? People got mad about that situation because the clearinghouses actually halted trading because they were fronting all that capital that they didn't know that they were going to get a return on. And they knew that the brokers oversold the shares and were going to have to pull some back. So anyway, a lot of people ended up being angry at Robinhood and the brokers when in reality, it's just inefficiencies in the system that we have with the discrepancy with the UI, right? The user interface makes it feel real time, but it's not. And so scratch a few layers deeper. I'm hoping that we're able to solve that problem and you are able to trade real time 24/7, 365. And I think that is something that XRP and the XRPL could facilitate. So if we got that, 4 digits all day long. If you got, good volume on Swift, if you got just 10% of Swift transactions, I think you could see high double-digit XRP. If you got all the Swift transactions, now we're talking triple digits. Same thing for liquidity on exchanges. If we saw Tether get sanctioned and there's a liquidity crisis for the exchanges, I think that, if you look at Shane Ellis's theory for $500 XRP, it's actually pretty reasonable, right? If you just do the math on things, most people think it's outrageous. They can't fathom a market cap that would be that high, but it's really just supply and demand and running the numbers. So, to your question, I'm going to say, with the caveat that it's 50 or higher, potentially double digits, but in most circumstances, I wouldn't even say double digits. It's either to the moon, crazy, or single digits. Is my theory. Liam, I wonder if you're I have a good buddy that's in crypto named Liam, and I haven't talked to him in a while. I don't know if this is you or not, but hey, if it is. Hear a lot about financial institutions utilizing XRP, but can you shed some light on big corporations using it, like name brands, like clothing brands, tech, etc. is never mentioned. Yeah, so if there's a PowerPoint document that was released by R3. Oh, here it is. This one. Back in 2017. And they show Android, Google, Amazon, Uber, Facebook, all these corporations that you know and love utilizing this network and being tied into DLT. And the reason that they would do that is they have people that they pay in different currencies across the globe that work for the company, right? And that's a problem. I don't know if you've ever sent money abroad or purchased something in another country or had to exchange your funds for something else to buy something and send a payment, sending international wires. It's costly. It takes a lot of time. You have to have trusted partnerships set up. The banks that are intermediaries in those situations make a lot of money off of the frictions and the fees because they have the trusted partnerships and they're able to pass that along. Sometimes you go through 2 or 3 intermediary banks just to get to the one that you want. So Swift is helped that out with the IBAN numbers and the IMApping and a lot of that and ISO 20022. But these large companies that have international interests, Starbucks would be another one, McDonald's. There's tons of franchises that are global and operate at scale. And so I think that they could be provided a lot of efficiencies if they were to utilize DLT and an agnostic asset like XRP to swap between currencies and send payments. So that would be the use case for those companies to utilize the network and the asset. Thermal Predator. Love the name, man. Do you have any dates on when the SEC versus Ripple case will be finalized? Not any more than anybody else does. When are the big moves going to happen for XRP? There's just so much positive news out there. Yeah, things are building, right? You have these narratives that we've been talking about for a while, starting to compound on themselves. You're starting to get a little bit of news, drip, drip, drip every single day. Soon, hopefully, right? I say this every time I get on here. I don't have a crystal ball. I think that the SEC and Ripple case is going to go all the way, and I'll qualify that and kind of explain why. I think Ripple could have settled a long time ago if they wanted to, and I think they didn't on purpose. I think that they want full clarity for other assets to be able to have a framework to be issued and brought to market without scrutiny from the SEC or the CFTC or whatever other governing body decides to take action against them. If there had been a framework for Library, that case might have been different. They just didn't have the money or the resources to fight the SEC like Ripple has. So I think that Ripple will respond, on the 22nd, and then the judge will issue some type of ruling after both sides have pled their side. The SEC asked for $2 billion, which is absolutely ridiculous. The most that's ever been awarded to anybody in this type of case has been $50 million, which is far less than what they're alleging the damages are. Just absurd. And but it still freaked people out. I had a lot of people text me when they were like, "Oh, what's going to happen? Is Ripple going to sell all their XRP to pay the fees? Did they get fined?" And I'm like, will you just read the documents and like calm down a little bit here? But people get emotional. I've seen some people in the last couple days here post on Twitter. They've held XRP for 6 or 7 years, and they're finally capitulating. They're just, all right, I've had enough. It's been drug out long enough. Not doing it anymore. I'm going to invest it in something else. I've missed out. I missed the boat on all these other things. And now they leave it like right here, right when, like, to your point, there's so much positive news, and they're going to cut it short. I don't know if you guys have ever seen that meme or the visual where there's a guy that's like digging a tunnel and he's like 3 inches from gold, and he stops and turns back the other way. That's where I feel like we are. I feel like we're right about to break through with all this stuff. And you have people that they can only take so much, not everybody's cut from the same cloth. Not everybody can make it, and that's okay. I just hate to be on the other side of that, right? Like, I hate it for the people that make it almost to the end, and then they sell, and then within a couple days, that seems to be how it always happens too, right? Like, I don't know if you've ever experienced that, but you like hold something for a long time and you get like anxious and you see all these other things popping off and you're like, I kind of want to jump out of this. I don't know when it's going to go. And as soon as you do, that's when it goes. And you're like, if I'd have just stuck it out for 2 more days, anyway. So I think it's all event driven. We need Tether. I'm watching Tether in Japan. That's what I'm watching. I'm watching stablecoin regulation here in the U.S. Tether does not meet the qualifications for a stablecoin under the bill. And if they were to pass that, they could sanction Tether. They might sanction Tether without that. Been talking about that for a while. So it's kind of my anticipation. And those are the 2 things, the catalysts that I'm waiting on. Maybe we get something before then. I don't think we'll get a settlement before then. But I could be wrong. Again, no crystal ball. So let's see here. Velva says, part 2. Well, hold on. Go back to part 1. She says, underlying events, XRP rise, are what people would consider with scary language. In your opinion, how will everyday life look in the next year outside of our crypto accounts looking nice? And then part 2, she says, if clarification is necessary, basically what's consider actually scary in everyday life during this change versus what the red pill Mad Max people say. I'm going to try to interpret this the right way for you. And my answer is probably going to be something different than maybe what you expected. I would say it's going to depend on where you're at. I don't think that we're going to have the same. It looks like we are. I know a lot of people think we're on the precipice of like a major depression and a collapse and this horrible outcome. And without distributed ledger technology and the capability to like rehypothecate the debt on chain to build value in this network, yeah, I think we would be SOL. We would be in a bad spot. But I think BlackRock and the governments and a lot of people have kicked the can long enough that they've been able to shore things up in the back end so that when they let it roll over like it should have a long time ago, they can catch it and make things right and fix it very quickly. Which is fine by me. I don't want a Mad Max scenario. We've got a couple days worth of stuff here. A lot of people are preppers and they got months worth of stuff. Like I said before, I got a buddy that's that way, and I'm like, hey, it hits the fan. I'm coming to you, and I'll, bring my stuff and help you out, and I'm fit and young and can take care of some stuff, and that'll be my contribution. And he's cool with that. He's older, so um, I really don't see it as scary. If you haven't prepared, and you miss this opportunity, which a lot of people are going to. No, a lot of people aren't even looking at crypto. They have no idea what's going on. A lot of people aren't looking at utility assets. They're too caught up with Solana and Ethereum and NFTs and meme coins and Bitcoin and a lot of the other narratives that are in the space, even if they are aware of crypto and do have investments in it. A lot of people are stuck in the stock market, and they're betting their life savings on that continuing higher. We don't have the same constraints we've had for the last 50 years. We don't have a downtrend in interest rates. We've got a recent spike. You've got treasuries in a spot and a currency collapse potentially globally. We're at the end of, like, I don't know if you guys listen to Ray Dalio or not, but he talks about principles and cycles. We're at the end of a currency cycle, and talked about this before, but I don't think that there's going to be another opportunity like this in my lifetime or your lifetime. So maybe the scary piece will be for the people like I just talked about that did have regret or remorse for not participating. Maybe they heard about it or just didn't take action. But I think they'll be fine. I think that they'll shore things up. If anything, it'll be a short-lived scare event. People are concerned, and then they'll fix it, right? Like I said, I think they've got it orchestrated. So I could be wrong. Maybe the whole world goes to crap, but I'm confident it's the other way. So I don't listen to a lot of the fear mongering. I just see too much promise with a lot of these technologies that are going to be implemented over the next 3, 4, 5 years here between AI and blockchain, smart contracts, 3D printing, nanobots and technology. There's just so many things that are going to culminate that are going to increase our quality of life and provide benefits to society that I don't think that there's any way that we have an economic downturn. There's too much value that's going to be brought to the market, and aside from human labor, which is what most people are used to having, creating the value. So I don't know if I answered your question the way you wanted it, but ask it down below a little more clear if that doesn't cover what you wanted or it wasn't what you thought. Bella or Velva. Let's see here. Chris 88. He says, Jake, wondering if the tokenized asset drives the price of XRP if it sits on the XRPL, or does the price drive up only when it's transacted? Yeah, it's just volume on the network. So the money has to be moving for the price to be high of the asset. If it's not providing liquidity, if it's not moving value, it's not going to be stable. So, excuse me, there's already markets and parties that are transacting at scale on a daily basis. Those volumes and transactions moving onto the XRPL would make price substantially higher. It's not just, you could tokenize something on the network, but if nobody's transacting with it, it's not going to need an intermediary to move the value. And so therefore the liquidity, there is no liquidity, right? You need a buyer and a seller, and they need to transact, and there needs to be liquidity between those two, and something that can move that value. And that's what drives the value of the asset on the network. Here we go. Mr. Z, he says, thanks for all your help, Jake. How do your Canadian clients set up LLCs? Canada doesn't have them. Cost, Canada tax is affected. What's the process? Lots of questions here. Yeah, my recommendation would just be get out of Canada. I wish I had something better for you. I will say the main benefit there in Canada is that you can gift until your heart's content. There is no lifetime gift tax threshold like there is here in the U.S. Or other buffer. That is the one main benefit of Canada, is you can gift into a trust at any point with no constraints, or it's not like you have to pay taxes on it. So I would get your assets into a foreign entity The partner that we work with there primarily in Canada is Aaron Grinhaus. He is an estate planner, and he helps people set up entities in the Caymans, Bermuda, down south. So you can snowbird and go on down there. Obviously, it's a little more costly to do so. If you have a TIN, if you have a tax identification number here in the U.S., you can set up an LLC in Wyoming. We do have clients that do that. But anybody that's in a foreign jurisdiction to set up an LLC here, you are going to need a TIN number, and that takes 4 to 6 weeks to get that if you put in the application. So just keep that in mind if that's something that you want to do. Costs associated with those trusts are going to be a little bit higher, north of 10,000 American dollars to set those up down in the Bahamas or the Caymans. He normally works with high net worth individuals that have a decent amount of crypto and works with our clients as well. So again, if you have a TIN number, if you've got a visa, if you've done work here in the US, we can help you set up stuff here. But for the most part, the majority of our clients that we deal with work with Aaron. He does set up stuff down there in the Caymans. So here's a good question by Marcia. She says, if I put money into a trust and I trust capital, do I have to wait 5 years to be able to draw money out with the penalty if 59.5 or above? Yes. So those are qualified assets. I much prefer non-qualified, just personally. And this is not financial advice. I'm just going to tell you what I did. I did have a 401k that I rolled to a self-managed IRA. And I did have that at Bitcoin IRA for a period of time. I had that there during the snapshot for the Flare and the Songbird, which was a mistake. Anyway, I took possession of the assets off their platform. You can take the distribution out of the IRA in kind. So you don't have to cash it out. You can send it to your crypto wallet directly without cashing it out and then buying back. You do owe the fees and the taxes on that. So if you're going to do it, I would do it before price appreciation. It is a process. It takes like 10 days of going back and forth and signing forms and the penny test and all the other things that they make you jump through. The other thing that you're encumbered inside of an IRA is you cannot take loans against the principal asset in an IRA or in a qualified vehicle like that, whether it's a Roth or a regular IRA or a SEP or a 401k. I'll take that. 401k you can, not an IRA though. Now, if you earn, let's say you stake it and you earn yield on it, and that goes into a separate account, you can take loans against those funds. So there's a way around it. We're working through it. We do want to be able to migrate people's IRA into an IRA LLC or trust. That gives you a lot more freedoms, and you can hold your assets independent of iTrust Capital uses Digital Trust, I think, is their partner for custody. If you have it in an IRA LLC or an IRA trust, like I said, you get a lot more freedoms with your stuff. So there's nobody that currently will migrate assets that are in a traditional IRA or Roth IRA over into an IRA LLC or trust because there's no intermediary that provides custody for the interim on that transaction. We're working on doing that. As soon as the NYDFS figures it out with Ripple and standard custody, that's something that we're going to be working on within the next 3 months here, and we should have the capability to do, giving you a lot more freedoms with your assets on the other side of that. So I know that was probably way more information than you wanted, just based on your question here. If I answer that specifically, yes, you have to wait 5 years. And if you do that before, if you take withdrawals before then, and or before the age of 59.5, you are going to be faced with extra penalties and fees. But again, if you do anticipate your assets appreciating significantly, and you're not within 3 or 4 years of 59.5, I took mine out. That's all I'm going to say. Let's see here. Martin says, can you talk about how much possible yield we may earn from F assets and AMM? Thank you. Good question, Martin. And the answer is somewhere between 2% and thousands of percent. I'm completely speculating. I've talked about this before. F assets depends on what they do with layer cake and how everything works in that ecosystem until we get F assets, and institutions hold them and they utilize the Flare network at scale, which is, I think they will. So I'm probably going to take this question in a little bit different direction than what you asked here, but the majority of the people that would have been distributed the Flare token, in my speculation or opinion, would actually be financial institutions. So the snapshot was taken December 12th of 2020. The distributions finally took place like 2 years after that. They still don't have F assets, but it is in beta, so it is coming. Hugo is going to deliver, hopefully, on his promises that he made a long time ago, which I am excited about. We did get the Songbird. We got the Flare. You got S assets, which is the test net. And you can, earn yield a couple different ways. You can earn it like 3 different ways with the same asset, which is cool. My hesitation to the Flare network and minting F assets is for XRP in particular, you have to put up twice the amount of Spark as the amount of the value of the XRP that you're minting for the F asset, or 2.5 times, I'm sorry. And the other person can run off with that. They can run off with your XRP if they're willing to forego the 2.5 times the value. So unless I'm putting up both sides of those transactions, I got enough Spark to be able to mint it myself, and there's no counterparty risk. It's not something that I'm going to participate in, but if I do have enough, then I'll probably utilize that network for some yield and time my asset up there, because then I'm the counterparty that holds it. But if somebody else is holding it, I don't know about that. And it could be really good yield. I don't know. I think it's probably, like I said, the choice, the DeFi of choice that the banks will use, along with what they're rolling out for XLS 66, 64, and 65 on the XRPL for borrow, lend, and earn capabilities. So, and then the AMMs, again, are going to vary wildly. When I talked to David Schwartz, he made it seem like it wouldn't be that lucrative back at Consensus last year, almost a year ago. Actually, I think it is like tomorrow, a year ago. I think he was really kind of focused on stable coins. And if you're providing liquidity to those, there's no volatility of the assets. There is right now, right? As long as the assets aren't pegged, there's volatility in the FX market and people do arbitrage that. And you could provide liquidity to currencies or CBDCs or stable coins, whatever is going to be traded and swapped, exchanged through the AMM. I'm looking more for assets that are going to have significant price appreciation and volatility between them as they trade. So like a Casper and H bar pair, I think would be really good, or maybe like an XDC quant or something. That's kind of stuff that I'd like to provide liquidity to. The more volatility there is and the more illiquid the market is when you're providing the liquidity in the AMM, the higher the yield that you're going to be able to earn on it. So, we'll see. I'm sorry I don't have a more direct answer for you. I could speculate all I want, but I'm probably going to be wrong. So I'll leave it there. Mr. X says, all right, I need one of those R3 hoodies. If you want to work with them, if you're going to build a project with them, they are very liberal with their goodies and their branded things. You get the R3 thermos, and I'm also getting a coffee cup. Shout out to Jeff if he's watching. Appreciate you on the swag. Let's see here. Hazy Days says, hey, Jake, I really enjoy your insights into XRP. I'm thankful for the time and energy you spend in the space. Thank you for the kind words, brother. He says, be blessed. I'm very blessed and grateful. Do you see a great increase in price in the next 3 to 6 months? it's all, uh, there has to be catalysts and other things that drive the price, right? It's not going to be, it's not going to get to the prices if it's not used at scale by enterprises and institutions that most people want, right? And that's going to come from them being forced into a corner where they have to adopt it. You're going to have capital markets fail from illiquid circumstance, or currencies fail from people dumping U.S. treasuries and debts, or foreign debt holders dumping our treasuries. I think both of those could be circumstances that could play out that could drive the appreciation of the asset and the adoption. But those are the things that I'm looking for. And until they happen, we're probably still just going to on sideways. Chart's looking really good. TA people are telling me moon is imminent. But I'm sure there'll be news that goes along with it. Like I mentioned before, when Ripple locked up the escrow, that's when we saw the last one. There was a narrative around it. There's lots of narratives that could unfold here. There's lots of dominoes and ducks in a row. I don't know who falls over what first in what order, but they're going to knock the other ones over. And then that's when we're going to see adoption for this. So Rob Strong, good question here. He says, with the EVM sidechain bringing ETH assets, does it allow pools in the AMM to compete with Uniswap? The AMM already competes with Uniswap. Issued assets on the XRPL can be swapped. Now, it's a good point you bring here with the sidechain. So we're going to need the X-Chain bridge to be passed. You've got digital identity and the X-Chain bridge. XLS 38 and XLS 40 are those two amendments on the XRPL. Currently sit at like 13 votes apiece. They've been there for a while. So I don't know when those will get passed, but both of those are going to be crucial for the actual full-scale adoption of this network and its ability to compete with things like Uniswap. But you've got ETH, under some scrutiny at this point. You've also got Uniswap that's been served the Wells notice and will likely end up being qualified as needing a broker-dealer license and probably fined. Just my opinion. We'll see how it works out. But I think that's the way that it's going to work because it's a layer 2 and there's a company that's behind it. And they can remove or add tokens at their discretion. Therefore, they are the intermediary party and should be licensed as a broker-dealer for doing so and earning fees in that environment, which they do. So the AMM is embedded directly into the layer 1. It's agnostic. There's no intermediary or specific party that has the capability to remove pools. Anybody can set up an AMM on the network if they want to learn how to do that and provide liquidity to that pool between issued assets on the XRPL. So I'm hopeful, to your point here, that the EVM sidechain and the X-Chain bridge does allow other networks to be interoperable with the XRPL and to be able to utilize the AMM at scale to potentially replace some of these other, or compete with, I shouldn't say replace, compete with some of these other products that do exist out there in the DeFi space. Let's see here. Man, a lot of people in the chat. Thank you so much for all the questions here. Here's a question from, well, maybe it's a statement. Pay Me an XLM says, hey, Jake, a startup CEO gave family offices a lot of praise. She wasn't able to get funding from her business blockchain until a family office understood the technology and brought on others as well. Yeah, family offices. So just to give you guys kind of I operate in a very niche space. I think we're in the second inning on family offices, and I think we're in the second inning on digital assets also. These really have only come into vogue maybe in the last decade here. Previous to that, you had Rockefeller and a lot of other affluent families that had kind of figured out this model, but it really hadn't been dispersed to other people, where some people had embedded family offices. And that's also, there's really no rhyme or reason to how family offices are orchestrated. There's no scalable structure that people have put together that they sell as a family office structure. if you've seen one family office, you've seen one family office. They're all bespoke and different and specific to the family's needs. I'm hoping that we can put together some type of framework that's modular, and then based on a family's needs, we can build things that fit those needs, right, very quickly, and make things a little bit more scalable. I think there's going to be a lot of people in this space that could utilize that model long term and maybe want to. We're working on potentially a DAO solution that could help facilitate some of the functions within a family office. I think that that's a very creative and intelligent way to structure this, especially if there's multiple parties using assets within a family or need to vote on things. You know, we do structure things in a way, and or you have a board of advisors and a financial committee, and the constraints or the qualifications to sit on either one of those two are, I don't want to say very different from one another, but there's some differentiation to actually be on the financial committee and invest the capital. You know, you would want to have investment bankers and people that are very well qualified and competent with wherever they're investing the money. And then you've got the board of advisors, and that's really where you have the family and they help make decisions. So as a family grows, people are people, and they're going to have disagreements, and they're not going to like other portions of the family, and people have conflicts, right? So you want to separate that from the management of the capital. Otherwise, things can go south very quickly. We saw that with the Vanderbilts. You know, they burnt through one of the largest fortunes in U.S. history in 3 generations and were broke. They're still very prominent because of all the connections that they created. And some of them have done well, but they've really blew it in comparison to, you know, the Rockefellers and some of the other families that had wealth at the same time. So anyway, you want to separate those two things, and we can talk about that if that's something that you guys are interested in. But yeah, I think family offices will continue to be one of the main capital sources for people in the future. VC firms, they come with some strings attached, and so do family offices. Don't get me wrong, but they're the network that they provide sometimes can be more beneficial than a VC, and vice versa. There's certain circumstances where you might go to venture capital or a private equity firm over family office as well. And it also depends on the stage of capital raising you're at. So an earlier stage, like pre-seed, seed, Series A, you're probably going to be looking at angel investors, friends and family, maybe family office for a small check, depending on the size of the family office. And that's the other thing. Like some family offices are $50 million, you know, and some people may poo-poo on that, and they don't need all the services, right? They might not need some of the full scope of services that we provide at 50 million. It's really over the $100 million mark is when, you know, it justifies the 1.5 million per year to manage everything and pay all the professionals and make sure that you're earning interest on your capital. Sometimes it could be up to 2.5 million or 3 million. Just depends on who's working there and what they're doing. But anyway, yeah, I think that that'll be huge moving forward. And I think, like I said, we're just in the second inning. There'll be a lot of things that happen with family office over the coming decades that really kind of fortify that as one of the major powers for capital and making investments. Let's see here. Luis Fernandez says, why everyone thinks that BRICS going to use XRP instead of Bitcoin, specifically Russia that doesn't care about U.S. companies like Ripple. Well, to your point, you know, Bitcoin is agnostic. There's no central intermediary that controls the network aside from the miners. The miners could collude and remove transactions. We did see a 51% attack with Ethereum when it was proof of work, and that's what migrated it from Ethereum Classic to the Ethereum that we have today, and it forked. So that could happen. It's happened in the past on another network. And Bitcoin would have been really similar to XRP if they had allowed the increase in the block size, but they didn't. And so because of that, it's the latency and the speed of the transactions, which is latency, and the cost associated with high volumes on the network, and also the energy consumption that really don't make Bitcoin ideal for international transactions at scale. Now, XRP is the same, but it doesn't have all those headwinds like Bitcoin, right? So there's no energy consumption, or if there is, it's very, very minimal. People aren't incentivized to mine on the network and be able to earn rewards that way. There is no incentive, right? The only incentive to have a node or validator on the network and review the transactions is so that you can trust the network and know that your vote counts, right? We're doing that now with the validators on the network. They come together and pass amendments that they see fit, and people can vote or not vote, right? You can downvote things, and sometimes things don't pass. So it's really more of a level playing field than Bitcoin. Bitcoin, you could manipulate, right? So if you had better computers, higher GPU and throughput and output, if you had a quantum computer, you could mine all the Bitcoin in like a week. It's just not a scalable solution long term, and I think that might have been when they decided not to upgrade the block size. It really hurt Bitcoin in its capability to scale to the same use case, and that's why it's been pushed over to more of a store of value or an equivalent to gold rather than a peer-to-peer payment solution or international settlement solution like Ripple provides. Ripple, the XRPL is not domestic to the US, it's international. They have integrations with banks globally. And other people run validator nodes on the network that aren't even associated with Ripple, right? People develop on the network that aren't associated with Ripple. Got another company right here on my chest. So people make this mistake, I think, that Ripple is XRP. They're very separate. Obviously, Ripple has done a lot to foster the adoption of XRP, but I think it's to the point now where it's at scale and decentralized enough that there's no counterparty risk. And I talked about this before, right? Nobody can freeze the XRP. Nobody can claw back the XRP. The original account was black holed. Can't issue more XRP. You can't increase the supply. And that's, people talk about Bitcoin being deflationary. It's not actually deflationary. It's inflationary, just at a smaller rate after every halvening, which we have here in 3 days. I think the 19th is 2 days. We got the halving. So, I know a lot of people are excited for that, but XRP actually is deflationary. There was a full 100 billion that were issued in the beginning, and over the time period that it's existed, I think we're at like 99 billion something now. I don't know what the current burn rate per day is. When I calculated it out a while back, I think it ended up being like 1,000 years before you burnt through all the XRP. But there is less and less of it every single day. And it's the only deflationary asset aside from like isotopes or radioactive material. There's literally less of every single day. So anyway, for all those reasons, I speculate that international countries, including the BRICS nations, would rather utilize XRP than Bitcoin to settle transactions between themselves and with the US, again, because there's no overarching power. And to your point, Bitcoin has the same thing. There's just so many other downsides to Bitcoin aside from the upsides to XRP that, again, I think it make it more advantageous. But it's a good question. Echo. Who else? He says, what do you think investing will look like after 2030 when utility really kicks in? AI and algorithms and bots. Things are going to change so dramatically by the time it's 2030. Like, I don't think people comprehend the pace at which things are going to move after they do click this over. We're already seeing things progress very rapidly with AI. Chat GPT and large language models at scale are going to augment people's capability for output and make you superhuman. You've also got Elon Musk with Neuralink. They've already got a patient, that's increased his quality of life. That's a quadriplegic that they've helped him. He has access to the internet, can think the internet, basically. Yeah, I just, if you are not using AI or working with a bot or algorithms to trade or invest in 2030, I don't think you'll have the capability to just invest. I think that there'll be investor protections that probably inhibit that, and you'll probably have to work with an AI or something else at scale to just even be able to have a chance in the market. But you're still going to have asymmetric bets, right? And so you're going to have to look for opportunities that other people don't see, and that's never going to change. There's always going to be discrepancies in the economy or global macroeconomic events, or maybe even interplanetary events at that point. If Elon Musk gets his way and we're on Mars, I don't know. But there's going to be other economies. You got metaverses. I think that that's probably a thing by 2030. So just extremely different would be my answer. I don't know in what ways. I can only fathom, right? We'll find out over the next 6 years here how things progress. But I do think it will happen very rapidly, and I don't think most people, like, we're on the curve here from Moore's law going exponential in how fast technology progresses. And if you're not iterating and learning and changing and adapting very quickly, you're going to be completely left behind. And people are going to have to augment with these other AI agents and assistants and other things just to stay competitive in a marketplace, and including in investing. Let's see here. Daniel C says R3 on your shirt, Ripple or XDC? Well, Ripple is a competitor to R3, so it's not Ripple. And XDC, you have a company, and then you have a token here. So I'm having a hard time determining what you're asking. You got Zenfin and Ripple, and you have all these other companies that are developing on XDC's network, and Ripple's developing on the XRPL. Are you pitting XRP against XDC and what they're utilizing to settle? I'm just not sure what you're asking. So I'm going to leave it there. And if you want to qualify that, or, give me a more reasonable question with more context, I'm happy to provide an explanation further down here. I appreciate the super chat, brother. You did not ask a question, but for the money, and thank you so much for, hopefully I'm providing some value for you. I'm going to try to keep this one a little bit shorter tonight, maybe like an hour and a half instead of the full 2 hours. I've been going to bed late and not getting up as early as I like. So, but I really do appreciate everybody that comes on here and watches, and I really do enjoy doing these. So, John Blazer, he says, Jake, the mastermind needs some Neuralink. As always, brother, thank you for what you do. Well worth $100 per month, deal flow and information. Thank you, brother. We appreciate you being part of the mastermind, and we just provide as much value as we can for people. I've talked about this before. I've been in other groups and paid way more for way less, and we just always want people to feel like they're getting far beyond what they're paying for. And I'm glad that you feel that way. That means we're doing our job. So, and for anybody that, is watching that wants to try it out, we do have a tier that's like $25. Try to make it affordable for people so you can put your toe in the water. If you want to DM me, I think we still have a promo code maybe for a free month. I'll have to look at that. But yeah, if you want to email me, just info@beyondbroke.com. We'll see if we can orchestrate that for you, or we'll pass the link to you if you want to try it out for the social membership. You get a lot for that, but the carbon one is $100 a month, and you do get access to the investments and the resources and the events and all the other stuff that we do within the mastermind. So, let's see here. This is nice, Danny. So you didn't ask the question up here, but I think you did here. He says, thanks for giving to the common man access to wealth, building information opportunities. I had no chance at this before I came to you. and your mastermind. Keep up the great work. I'm glad you're in the mastermind, brother, and I'm glad we're able to help you. Again, I learned all this selfishly and put all this together for me, myself, and my estate and my family. And I'm happy to share the resources that I've been able to build and aggregate over the last couple of years with other people, and provide them, information so they can make the best choices for themselves and their family. So again, just really happy that you're with us there in the mastermind, and thank you for the kind words. Let's see here. We've got we're always all the way back at the top. I'm gonna roll down to the bottom here. Here's another super chat. Thank you for the $10. Hi Jake, appreciate your channel. Appreciate you. Question: who do I speak with in Australia that can help me structure and plan around my digital assets, XRP, XLM, XDC, etc.? Party Ltd Family Trust. Again, thanks, mate. Yeah. So John, I think Basilos is his last name. It's our contact over there. He's an estate planner. You can get a family trust set up for like 400 Australian dollars, which is fantastic. And it is specific to digital assets. He works with a firm that has 12 different offices from Perth to Sydney to Gold Coast, like all over. So if you want to reach out again, you can just email info@beyondbroke.com or info@digitalfamilyoffice.io. Either one of those will end up to my firm, and we'll make sure that we pass this information along to you so that you can get things situated over there before a liquidity event. A lot of people do look at Singapore, Thailand, or some of those other jurisdictions in Southeast Asia, just for a little bit more friendly climate as far as taxes go. But if you get your stuff into a family trust there in Australia early on, before price appreciation, it can be a really good way to mitigate those taxes. So happy to pass that information. Just again, email me and my team at info@digitalfamilyoffice.io. Let's see here. AJ says, Jake provided details of a lawyer in a previous video. If you missed it, yeah, we have a bunch of different lawyers that work with the firm. I was actually just in New York for NFT NYC and spoke there on regulatory compliance and some of the legal framework for digital assets. On the board or the Forbes Council with NISBA, which is the New York State Bar Association, and their digital assets division. So I got to meet with all the lawyers that sit on that board that deal in different types of law, criminal, civil, estate, business, and all have competencies with digital assets. So that was really cool to meet all those people. They're proficient with that, and get their contact information so I can pass that along. IP, trademark, copyright, all of that stuff as well. We've got really good connections when it comes to the legal side of things for digital assets. So if you have any questions, need a lawyer in any one of those regards, happy to share with you. Again, just shoot me an email. My team will make sure you get taken care of. Let's see here. Dustin Bauer says, was there a moment, particular piece of evidence that you came across that gave you this much confidence and conviction in XRP's thesis, or was it just the confluence of data points? It's really the confluence, man. So I don't believe in get rich quick. I never have. I've said this before. I go to the casino and I take $100 with me, and if I make 100, I'm out. If I lose the 100, I'm out. Like, that's my risk tolerance. That's my fun money. I don't gamble. I need a lot of conviction on things. I did a lot of research when I got into digital assets and diversified across a bunch of different things that I thought would do well and had utility and did pretty well. And then consolidated now. And that's because I spent almost 2 years waking up every single day trying to figure out how I was wrong about XRP, and the XRPL and its adoption, right? And I came at it from every angle possible, trying to, basically prove it wrong, that it wasn't going to happen. And every question that I asked, I just became more and more convicted that I was right. And I have a hard time I don't think that I'm smarter than other people. I think I've been really blessed to have good mentors, and I learn quick. Right? If I make a mistake, I try not to make it again. But yeah, just overwhelmingly the team, and I look at XRP similar to, and Ripple provides a lot of like conviction, right? The people that have come to work at Ripple and now sit in other positions, and the people that they're involved with, let you know that they're not messing around. They really are a company that's going to make a dent in the universe, and their thesis is they want to utilize XRP and the XRPL to do that. So I think they're probably going to be successful in it. But there's other companies that utilize XRP for settlement. And I think that that's really what differentiates it from other things. Well, I say they use it. They have the capability to use it, because I know people are going to jump down my throat on that. Do they use it now? Are they going to use it? That's what we speculate on, right? And that's why there's an opportunity. So to answer your question specifically, it was a confluence of data points, including the people involved, including the central banks and other people that were looking at this technology, government agencies that I've spoken to, 3-letter agencies. All those things kind of added to my thesis and ethos as to why it's going to be utilized and leveraged, and my conviction. So appreciate the question. Let's see here. Open coin XRP. I like it. Love the content. Do you think that XRP will be bought back at some stage? If it's not going to be designated as an ESDR, I don't know who keeps propagating this, but I'll address it again. So it could sit in the basket of the ESDR if a country were to adopt XRP as its currency, which could be like Liechtenstein, or there's another one that's a small country in Europe that's discussed that. It's not Luxembourg. Anyway, I think that there's a possibility for that, and it could sit in the basket at some point and be used to transact the value between the sovereign currencies that sit in the basket or the ESDR, and swapping it for countries. XRPs, well, so you mentioned the IMF here, so I'll point to this. In 2014, the IMF put out a paper where they actually referenced XRP in the paper, but their term was exchange rate peg. Previous to that, XRP was called Ripples by Ripple, and they rebranded to XRP after that paper was put out. Is there a correlation there? Does correlation equal causation? Not always, but interesting coincidence. So that's what I think XRP will be. It'll be the exchange rate peg that's used to swap value on a distributed network. And the ESDR would be one of the issued assets on the XRPL that the IMF manages. And they may have an allocation of XRP that they take as the lender of last resort, right? But it won't be an ESDR. It might sit in the basket, but I don't think it itself will be the ESDR. Let's see here. Theo. What's going on, brother? He says, if I have an LLC and I want to cash out after price appreciation, does it have to come from the address listed on the operating agreement, or can it come from a separate wallet, sell bag, asking for write-offs? Thanks. I have to have a little more context, but I'm going to walk through what I think you mean here. So let's say you moved it to an exchange and you're sitting it there with price points like Caleb and Brown or another OTC broker, and it's not in the original wallet address that you designated in the operating agreement. You'd be fine. Whether that's in your personal name or in the LLC's name, as long as you're the manager of the business, you could utilize a personal account to do that. You just want to make sure that the distributions that you're taking or the profits are going to go to a bank account associated with the LLC. And then, that'll be fine. The accounting will be a little bit wonky if it is an account that's in your personal account on an exchange where you're liquidating. Ideally, it would be in the LLC's name for the account that you're liquidating on, and then also sending it to the bank account associated with the LLC. But you can use a personal account if you are the manager to liquidate the assets on behalf of the LLC and then send the profits back to the LLC and then make the distributions from there, or use them for whatever purpose to get the write-offs, which is the main point of, well, there's a couple points of the LLC, but one of the main points of the LLC. Here we go. This is a good one. Hecky. I'm not sure if I'm saying that right. Sorry if I butchered it. Can you comment on public versus private XRP ledger and XRP price difference? If XRP priced differently on retail versus private institutional XRP? There's only one XRP. Okay, it's on the mainnet. It's on the XRPL that's public, and that's where the price resides. I've asked David Schwartz a bunch of questions about wrapping it on a side chain and transacting with it there. If you're going to trial something, you would set up private ledgers with central banks and allow them to operate in siloed ecosystems and trial the technology and make sure that it works and develop it over a period of time and get their buy-in. But they're going to need to transact on the mainnet. So, are these private ledgers, are there issued assets on the private ledger that are representations of XRP, but not necessarily XRP? Possible. I would think so. If you're going to, trial CBDCs, that's what's going to be there. Do they need XRP in those environments? Not really, because what are you swapping, right? You're just sending a payment from one to another in the same currency on the XRPL. So instant settlement and finality for cheap prices through the DEX, right? So you really need the interoperability between the mainnet and the side chains, which is the X-Chain Bridge, which is XLS 38D. That's an amendment. Again, we talked about that before. And I think there might be a correlation there between the private ledgers and the public one. I don't know that for sure. I do know that Ripple does run private permissioned ledgers on the XRPL where they trial things for central banks. But there cannot be a discrepancy between the price in those ecosystems for XRP and what's listed on the mainnet. But the price of XRP is the price of XRP. So sometimes we see these glitches up to crazy high prices. Is that interaction there, or is it foreshadowing? I don't know what it is. I think a lot of this, looking back, you'll be like, okay, that's what that was, and that's why that makes sense. But for me to speculate right now, I don't know. But I can tell you, I've asked David 10 different ways from Sunday. The price of XRP is the price of XRP. There's no difference between what it is on the mainnet and these private ledgers. If they're completely separate of the mainnet, then maybe, again, there's some other asset that has representation as XRP in those ecosystems that is different price, but it's not XRP. So, Becky, you're not alone. Just want to tell you. She says, hi, Jake. I live in a small town in Montana. I've had zero success even trying to find an accountant that even knows what crypto is. Suggestions. Email me. It would be my suggestion. I'm happy to share my resources with you free of charge. I can hook you up with people that have deep understanding of digital assets and accounting for those and how to do the taxes for them. Just happy to share with people because, to your point, it's very hard to find accountants or CPAs or anybody that even wants to touch this stuff, much less knows about it and is proficient with it. So I've called, when I set all this up for myself, I called 200 different professionals across the U.S. That stated on their website that they knew about digital assets. Not trying to toot my own horn, but I think I know a thing or two. And so was able to have conversations with them and kind of figure out who really actually did know anything and who was just kind of full of BS and trying to market on their website. So happy to share those resources with people as they need them. Just email us at info@digitalfamilyoffice.io. Roll down here to the bottom and see. We've got Edward. Appreciate you watching, brother. You participate a lot and you ask really good questions. Thank you. Makes this easy, right? If people ask good questions in the chat, then I have lots to talk about. So Edward says, why do you think the USA doesn't have any crypto laws yet? And since they don't, how can the government tax you? They have a designation around crypto as an asset, similar to like gold or commodity or another item that you own. And if you sell it at a profit from the cost basis, then you're assessed taxes on it, capital gains, whether they're short-term or long-term. That's just kind of the qualifier and the category that it's fallen into. Have to have some way to assess value in transactions. And I think that's reasonable. There's a lot of people that just want to evade taxes for whatever reason. The tax code's just a game. And if the government incentivizes people to spend money on things through taxes, or disincentivizes you to do things with your money based on taxes. And so if you just work within those confines and understand the tax code, then people get mad these billionaires don't pay taxes. Well, there's laws where it causes them to spend the money in certain ways to mitigate tax implications. And oftentimes that benefits society, and you're rewarded for that by not having to pay taxes, right? Do people abuse them? The tax loopholes or the laws? Absolutely. People abuse them. People are people. If you had a way to not pay taxes, I'm sure that you would do it also. It's the whole premise, right? But and if our government were to utilize tax dollars effectively, I think people would be a lot more apt to want to pay taxes if they saw the social benefit. And there are social benefits, and I think that we have a decent system. Could it be a lot better? Absolutely. Is our money messed up? Yes. Is that the core to why everything's messed up? Yes. If you look at everything correlates back to 1971 when we were removed from the gold standard. And then ever since then, everything's just got further and further apart and messed up. So we go back to that. We have sound money. A lot of the problems that people have today go away. And I think we're headed back to that. But you've asked, why do you think the U.S. doesn't have any crypto laws? If you haven't regulated something, it can't take hold. Okay. If you leave it ambiguous, then the moment that you regulate it, it can cause the incumbents to have to change things and utilize it, or actually have to confront it. And I think a lot of people weren't ready. Just a lot of the incumbents are slow to move. They're very ingrained. I don't know if you've ever worked with a large corporation, but to pivot them to a new system or roll something out, it takes years to do. If not, I was going to say like 3 or 4 quarters, but most of the time years to really get saturation and everybody at the corporation to get on board. And you normally have a lot of turnover and other problems. So government is the same way. Large enterprise and corporations are the same way. They're like turning the Titanic. It's not a speedboat. And so you got to give those people time to catch up. Otherwise, you might say, screw them. They're zombie companies and it's not a big problem if they go bankrupt anyway. And we want innovation and we want those removed. But it's just, you would cause so much collateral damage if you had banks go down or some of the other systems that people are extremely dependent on at this point. Like, let's say Amazon goes bankrupt tomorrow. That's potentially millions of people that are out of a job, right? What does that do to the economy? Like, and then again, people get mad. They're too big to fail, but kind of are, right? Like there's some serious implications if these companies go down or different things happen. And so you have to think through those. And if you're going to unwind things, it needs to be methodical. and over a period of time. It can't just be a whack and be done with it. So that's why I think that there hasn't been regulation. I think it's allowed people to catch up and get things in place. We're now hearing all the banks and institutions talk about tokenization of real world assets and stable coins and the implementation of digital wallets and digital ID and all the other things that we've been wanting for 4 or 5 years now. They're now talking about. So that's why I honestly, I'm extremely confident in that one. I think things just weren't in position, and now they are, and that's why they left it just unregulated and ambiguous here in the U.S. for so long. So hopefully that answers your question. Chuck, I talked about this earlier, but I'm supposed to get an update. I talked to them today. They said soon. Soon was what I got. What does that mean? Is the next week? Is next month? It's tomorrow? I don't know. I hope it's tomorrow. That would be really good for a lot of people that I deal with that are looking to onboard with standard custody and our solution for institutional custody for their assets. But nothing as of yet. Let's see here. This is an interesting name for a YouTube channel. Crappy Snails. He says, "Hi, Jake. Do you think the U.S. is so stubborn about crypto because it threatens the dollar, the XRP bill, and Bretton Woods 2.0? We actually have Bretton Woods 3 November last year. Yeah, the U.S. needed to catch up. I'll speculate on the scenario that I think played out. And I could be completely wrong about this. Maybe there's been plans for a long time. I know that, again, it takes a long time to implement things. You have to boil the frog. Sudden things tend to cause ripple effects and problems long term. So if you can incrementally work things into society and put things in people's mind, and the narrative around Bitcoin, I think, we've had it for over a decade now. People are familiar with it. They've heard about it. Almost everybody has. Like you talk about crypto and they're like, oh, that Bitcoin thing. You got ETFs, you got market saturation at this point, and the advertising's done. And now people know about digital currencies, and they still don't really understand the technology, which people didn't about the internet either, and how it would change their life. But you at least have people, almost everybody knows what crypto and Bitcoin is. But stubborn, yeah, I think the time frame was necessary for the dollar to be able to transition. And again, if you had a snap problem and allowed things to collapse without a contingency plan or something that could fix it, problem, reaction, solution. If you just had problem, reaction, like people get mad about problem, reaction, solution, but if you just had problem, reaction, and no solution, it'd be bad news bears, man. So yeah, I think that stubborn is probably a good way to put it. There's incumbents and the dollar supremacy, and we've been super privileged. If you live here in the U.S. and you've had the reserve currency, you do not understand. Maybe you do. I did not for a long time really comprehend the social, economic, and just huge blessing and benefit I've had my whole life to live here in the U.S. and have the reserve currency. We're able to export our inflation. We're able to buy things cheap in comparison to any other nation in the world. And we're able to draw debt in perpetuity, basically, print money into infinity. They could have drugged this out a lot longer. Like, had COVID not happened, we would have been like, we probably could have gone past 2030, just with the printing press, the way things were. I think they sped it up because they had to get this deal done, and why not, have a party before it goes. I don't know, it sounds silly, but yeah, I think we're moving to a level playing field, and I think this is going to be different than any other currency transition we've ever had in the last 500 years, because there's not going to be one reserve currency. There's not going to be a country that ends up dealing with Triffin's dilemma, which is where you hollow out your manufacturing and offshore it because you have this advantage to export your inflation and buy cheap goods from other countries while they're dependent on your currency to transact it in a global economy. So I don't know what it looks like. I don't know if the same currency cycles continue. Do another 100 years pass and we have some new iteration? Possibly. Is this a 100-year cheat code that we have that we can buy some more time with for global debt? Quite possibly. Again, I talk about rehypothecating the debt from this system on chain and being able to draw debt against the asset on chain to be able to balance the balance sheet. I think it's the way out. And they're going to be forced into a corner. So, anyway, again, probably rambling on, but appreciate your question, and I would agree with you. Let's see here. Polonini 65. And just to qualify, I'm gonna take 2 or 3 more questions here, and then we'll roll out for the night and let you guys get on with your evening. Again, appreciate everybody hopping in here in the chat and viewing. Hopefully you're getting some value from this. If you are, Mastermind, family office, do a lot of different things. And if you think there's some benefit there, we'd love to help you those ways also. Living legacy, I'm really considering do so. I like Jake's response to the other evening to someone who wanted a Porsche. He said to use the $10,000 pound payment on car wash to get $6,000 cash flow. Yeah, I mean, a lot of people don't think about this. So my definition of financially free, and I've said this before, but I'll close with this tonight. You have this dream lifestyle. You may not even have a dream lifestyle. Okay. You have your lifestyle. You have your expenses for your current life, $4,000, $6,000, $10,000, $20,000 a month. I don't know what your life costs you. Maybe you live quite comfortably, right? But you probably have to work for that. My definition of financially free is that you have mostly passive income. Sometimes it still takes some work and purview. You're never going to have completely passive income, but you have passive income that generates twice your monthly expenses, whatever those are. So if you, let's say, your expenses every month are $10,000 and you have a property or an investment or a company that you don't have to manage that produces $20,000 a month in cash flow that comes into your bank account. So, every single month you're going to have twice the amount of money that you need. That is financially free. Are you a millionaire? Maybe the thing that you invested in is worth at least a couple $1 million. But that money that you're getting the cash flow off that, that's going to continue to come, right? The asset, as long as you own it, if it's a business, if it's an investment in a property, if it's staking your assets and providing liquidity to an AMM or whatever it is, you're going to know that you're going to get that money every single month. And it's good to diversify and have different sources, right? So maybe you want to have at least 2 or 3 different sources that make up that $20,000 a month. That way, if one gets cut out from underneath you for whatever reason, you can replace it and you're not just SOL. But you can take that and you make the payment on your home, your car, your lifestyle, whatever it is, it funds it. And you're always in black. I'm always going to be cash flow positive. And so that's how I would think about things. Same thing when you're taking profits on your digital assets. If you're going to sell them and not use them to produce income some way, what am I going to put this money into that's going to be able to fund my lifestyle? What asset is going to cash flow every single month and pay me to own it so that I can, live the life that I want and enjoy nice things, right? Like the Porsche or the nice house or my kids' college or whatever you want to pay for and provide for your family. That's good quality of life. So, anyway, that if I could leave you with something tonight, that's what I would leave you with. I see a lot of people that are just taking profits willy-nilly and, I'm going to sell 10% here and a quarter, 25% here and 30% here. And I ask them, what are you going to do with the money? And they just know they need the money. They want the money. Well, what are you going to do with it to make sure that you're set up? And I think these digital assets that we own, you're going to be able to utilize those in some infrastructure to be able to produce passive income for yourself. A lot of that stuff's not set up yet, or we don't have regulations to be able to do it, but that's on the horizon here. So think through that. And if you don't take anything else from tonight, that's what I want to leave you with. Just have a plan and know what you're going to take the profits and what you're going to do with them on the other side of it. So with that, we'll wrap it up. I hope you all have a wonderful evening. Again, if you think the mastermind might be something you're interested in, we'd love to have you there. Just connect with me on LinkedIn and head on over there to the website. It's mastermind.beyondbroke.com. And then if you want some help, setting up your estate or wealth management or connection with professionals, you can email us at info@digitalfamilyoffice.io, or you can check out digitalfamilyoffice.io, which is the website. So with that, I hope you all have a wonderful week. We will see you guys probably next Monday. Hopefully we get some things that happen between now and then with Japan and Tether, and maybe next Monday will be a very different live, hopefully. So on that note, y'all have a wonderful night, and we'll see y'all on the next one.